Welcome back to The Young Investor, the podcast where we break down geoeconomic events and show you how they impact your wallet, your investments, and your future. I'm your host, Ali, and today we're diving into a story that's rocking the agricultural world, America's Soypocalypse. If you've ever wondered how a trade war between the US and China could send shockwaves through global markets, or why soybean prices might matter to your investment portfolio, this episode is for you. We'll explore how China's retaliatory tariffs are crushing U.S. soybean farmers, why Argentina and Brazil are stepping in to fill the gap, and what it all means for young investors like you. So, grab your headphones and let's get into it. Let's start with the basics. Soybeans are a big deal. They're used for everything from pig feed to cooking oil, and China is the world's largest buyer. Historically, China has purchased more than half of all U.S.-grown soybeans. But in 2025, that relationship hit a wall. Earlier this year, China slapped a 34% retaliatory tariff on U.S. soybeans, making them far less attractive to Chinese buyers. The result? U.S. soybean exports to China have plummeted by 71% compared to last year. That's not just a drop, it's a freefall. And it's leaving U.S. farmers with a massive surplus of soybeans, no buyers, and prices that are tanking. This isn't just a repeat of the 2018 trade war. It's worse. Back then, the US and China eventually reached a truce. But this time, no deal in sight. And the numbers are brutal. US soybean exports to China are at a 20-year low. Farmers are frustrated. And the financial strain is real. So, if China isn't buying from the US, where are they getting their soybeans? Two words: Argentina and Brazil. Argentina, in particular, has become a major player. The country recently removed export taxes on grains, making their soybeans cheaper and more attractive to China. In September alone, China booked at least 10 cargoes of Argentine soybeans, each one a direct hit to U.S. farmers. And let's not forget Brazil. It's the world's largest soybean producer, and China is buying record amounts from them. Brazil's soybean exports to China hit 2.474 billion bushels in the first 8 months of 2025. That's a 40% increase since 2018. Here's the kicker. Argentina and Brazil aren't just filling the gap. They're replacing the U.S. in China's long-term supply chain. And once those relationships are solidified, it's going to be tough for U.S. farmers to win back that market share. Now, you might be thinking, Ali, I don't own a soybean farm. Why should I care? Because this trade war isn't just about soybeans. It's about geoeconomics, and it's creating both risks and opportunities for investors. If you're into commodities, soybean futures are worth watching. Prices are down, but they're also volatile. ETFs like $SOYB track soybean prices, and they've been on a roller coaster. If you're trading futures, be cautious. This market is driven by trade policy, not just supply and demand. U.S. companies like Archer Daniels Midland, ADM, and Bunge BG are feeling the pinch. Their stock prices often move with soybean prices, so keep an eye on earnings reports. On the other hand, Brazilian and Argentine firms are benefiting from China's shift. Companies like COFCO, China, and Argentine exporters are seeing increased demand. This trade war is a reminder that geopolitics matter. If you're worried about more tariffs or trade disruptions, consider diversifying into agricultural real estate investment trusts or agritech startups. These sectors are building resilience in agriculture. The U.S. government has rolled out billions in aid to farmers, but it's a short-term fix. Long-term, look for opportunities in agricultural infrastructure, storage, logistics, and tech that helps farmers adapt. So, what's the end game here? The U.S. and China are locked in a high-stakes trade battle, and soybeans are just one piece of the puzzle. Any progress in U.S.-China talks could send soybean prices soaring or crashing. Stay tuned for headlines. China's shift to Argentina and Brazil isn't temporary. This could reshape global agriculture for years. Young investors should be thinking about diversification, not just in stocks, but in geographies and sectors. The next trade war could hit semiconductors, rare earth metals, or even electric vehicles. Thanks for tuning in to the Young Investor Podcast. If you found this episode helpful, don't forget to subscribe to our channel and our newsletter on Substack and leave us a review. Next time, we'll be diving into the world of supply chain shifts and their impact on investment opportunities. Until then, stay curious and happy investing.